What's going on, everybody? Jeff here. Welcome back to the channel. A massive movement inside the market today. I said in yesterday's video I would expect volume to be a little bit lighter ahead of the CPI numbers being released tomorrow, and it was, but we still had a good amount of volatility, and overall the market trended to the upside. AMC gaining another 10% twice in a row, up a total of 30% from yesterday's lows to where it closed today. I want to talk about a couple key levels, where we're at, and what the options chain looks like as we are starting to potentially see a lot of call volume pushing market makers having to hedge some of their positions. Break everything down for you in this video. Let's get right into it. First off, let's take a look at the overall market. The NASDAQ tech sector leading it as the treasury yields were retreating. That 2% was a big key level for investors to look at, as it normally does bounce off that level, and as it did today, which was good. I will point this out to everyone because I had a couple people reach out to me saying that they expected the market to kind of sell off all day long. And that's not generally what happens ahead of either a Fed meeting or a big event such as the CPI. You look at the overall volume. As you can see, the overall volume was 2.3 billion versus an average of 3.3. So we were only at about 60 to 70% of the average volume. And as you can see, coming into the power hour, it did started to cool off a little bit. I was eyeing to get some puts on the QQQs. Going into the close, it bounced off of the VWAP and immediately just continued to the upside. Kind of gives me a little bit of indication that investors have this already priced in. They can see where inflation is going to be and what the reaction is. A lot of times, not always, you want to look at what is happening prior to an event as an indication, as naturally retail is the last ones privy to some of this information. A couple of the plays we had today played out beautifully. I will say this to everybody because Facebook got me yesterday, got me 31% on the long side of some calls that I had. Didn't really play it out. It was looking for a breakout. I really thought it was going to get there, but there was just a massive seller slowly dumping shares around that 225 price point. But today it finally broke through, and we had some awesome plays up over 100% on those today. But let's take a look at AMC. You can see on the 2-day chart from where we were at as a low yesterday of $14.65, closing almost at $19. It's a 30% move in 2 days as we have 2 days left till options expiration. The entire market did move well, but I want to look at the options chain really quickly before we take a look back at the charts. As you can see, there was about 72% on the call side and still a good amount of volume coming into this. When you get to see rapid movements, especially of a heavily shorted stock like AMC, all right, the call option buying can really kick things into gear. Now, I don't know if any of you were watching Roblox today, but they had some news that was released about a partnership with the NFL, which was massive news. And Roblox has been hit. It had a negative short report put out on it recently. And once it got some of that move to the upside from the news, when that call buying quick kicks in, it'll be interesting to see exactly what happens tomorrow, because you put those two things together of massively shorted, a lighter options chain, and then all of a sudden heavy call buying and quick moves. This is what catches market makers off guard. And like I said, Roblox did have about a $2.5 move. But when you think about the percentage of 69 to 71 is not nearly of what 1465 is to 19 in AMC. Now, in the video I made yesterday, specifically talking about AMC as well, I took a look back out to this daily chart. We are going to have some resistance into that 2050 range. But once we get to break above, okay, this $18 range, we closed above solidly with good volume. As you can see here by the chart, it gives us a wide opening back up to that 2050 level. We can break through that, get back up to the 50 moving average, which is sitting right now at about $23. But like I said, it's going to be interesting to see how things come into the close on Friday. We could take one quick look here at the options chain just to see what the volume is, okay, coming into it. But I don't think it's going to be that much because this is not a week or a monthly options expiration. And naturally, the call buying has slowed down a little bit for AMC, but you're going to see some of the 18s getting in the money, all right, about 11,000, but that $20 is where it is a lot of action to that. And as you can see, the amount of value change has been massive all the way up the charts. So this is going to cause for the market makers to have to react a little bit, especially if the price continues. Now, the CPI numbers tomorrow are really going to dictate the entire market. All right. Obviously, investors do have a March hike priced in. They're still thinking it's at 25 to 50 basis points. As long as, in my opinion, inflation isn't too far out of reach, getting over that 8.5, 9% point range, then they're not going to consider that 50 to 75 basis point as some of the Fed members and presidents are actually talking about. So it'll be interesting to see tomorrow. But overall, great day, getting some good movement to the upside. That's it for this video, guys. I'll see you in the next one.